Let me welcome in our guests, Atanu Mukherjee and Paul Bartholomew, both of them joining us today. Thanks so much for being with us, gentlemen. Atanu, let me start off with you. You know, the gains that we saw due to the trade deal coming through, for instance, moving one step closer to a final conclusion, now seem to have been eroded somewhat by the impact of the coronavirus and on demand in China. How do you see the demand-supply equation now shaping up vis-a-vis what we were looking at, just a short while ago?
Right. So I think the couple of things playing out here. One is, of course, in terms of the tariffs, especially the January 24 tariffs by Trump. That's kind of like a damper on a little bit on the trade, given the cascading effect that it might have in terms of trade flows and steel. Obviously, the coronavirus is problematic from a perspective of demand deflation in China. Especially in the construction sites, right? The demand has gone down. At the same time, the supply side also seems will be affected because the supply chains, in terms of the supply out of China, would be affected severely, and that would affect obviously the corresponding supply into the countries where they export. So I think all in all, this is not exactly a very good news at this point of time in terms of steel demand-supply balance and in terms of its pricing, and I think there'll be continuing uncertainty for some time, which will probably have some effect on depressed prices going forward. But in the long run, I think we should turn out okay as demand kind of like gets up to the levels that it should, especially in developing countries like India and also in China in the later part of the year. And I think later part we should be okay.
Paul, let me bring you in as well. We did see that slight recovery in demand. PMIs in various countries started to show an uptick. Did you see any recovery in the December quarter? And, what sort of impact do you now see post the coronavirus?
Well, funny enough, I was just thinking when I was watching your last piece about protective masks and pollution, that protective masks are actually a very big factor at the moment, because Chinese construction workers don't have enough masks. China can't produce enough protective masks, and as a result, people are very reluctant to go back to work. So that's one of the reasons that we don't see any real sort of pickup in downstream activity until probably late March at the very best. So the last quarter of last year was pretty good. We've just seen some of the miners like BHP, up 29% for the first half. Fortescue Metals, again, very, very strong first half. But it's a completely different story now. We've got the coronavirus. Everybody's dealing with that. We're in a kind of 2 to 3 week period where, China is nominally getting back to work. But we've done surveys and half of the workforce are still at home. Half of my team is still at home. Some of them are still in their hometowns. They haven't got back to Shanghai yet. So, we'll probably know more going into March to what extent things are getting back to normal. But we see Q1 as being a bit of a write-off, really, in terms of demand. It's just being helped a bit by some tightness in supply in some of the commodities.
Sure. Okay, that's interesting. Atanu, so what are inventory levels across various metals currently that we're sitting on? Just if we track the trend over the last few weeks as well. Give us a sense of that, and just really what the outlook is now going forward as well.
We look at steel, which is a big one. I mean, the steel mills they continue operating during the Chinese New Year holidays, but of course the Chinese New Year holidays have gone on for another sort of 2 to 3 weeks, and maybe even longer in some senses. So those inventories have been sort of piling up. But there's no downstream demand because there's no construction workers, there's no factory workers. So they're getting sort of higher, and iron ore stockpiles are not too bad. Some of the other metals are not too bad. But generally, everything's affected by the same dynamics. There's some logistical constraints, very hard moving material around within China. As I say, a lack of people, doing the actual work. Everybody's still in their houses. People have not been out in some cases for 14 days. So no one's buying cars, no one's buying washing machines. So there will be some sort of pent-up demand, but I think those high steel inventories in particular will result in some steel production cuts. And we did a survey just last week to get a sense of what's going on. And probably around about just a third of the market thought there would be some kind of production cuts, because I think they're going to get squeezed on margins. And not enough downstream demand, and inventory is sort of climbing. So you're going to have that scenario. So we would be very surprised if they don't cut steel production a bit, which could have some impact on iron ore prices and things like that.
All right, let me also get Mr. Mukherjee back in. Are there any logistical and operational challenges, Mr. Mukherjee, because of what we're seeing post the coronavirus, as Paul was referring to, the slowdown in China, slowdown in people getting back to work? Do you see any logistical or operational challenges that companies will have to deal with?
Oh yeah, certainly. I think one of the biggest impacts essentially has got to do with logistics and the supply chain of movement of metals, movement of iron ore, movement of supplies. And certainly the coronavirus has got an impact in terms of how it affects the movements. And so I think you will see, obviously, movement out of China into countries where it exports, right, in terms of the steel materials, special steels that are being exported. That's going to be affected, certainly. I think obviously the logistics in terms of movement within China and supporting the mills in terms of production is going to be a problem for some time to come till normalcy is restored. And I think overall, we're seeing as we deal with different customers, logistics and operations continue to be a big problem in terms of both from a supply side, right, in terms of making the mills work, and from a demand side, in terms of supporting the demand of getting materials out of China into the demand centers within China and outside of China. So yes, it's problematic at this point of time, and I think it'll abate over time as things normalize in the later part of the year.
Okay, so in terms of prices, now they've been relatively resilient so far in terms of what we see on steel. We've seen a recovery also, for instance, in iron ore. So will stability continue when it comes to prices?
Yes, I think, there are two things that are playing out here. One is, of course, there is demand deflation that is happening because of the virus effect. At the same time, there's also supply deflation to some degree that's happening, right? And so they're kind of like balancing out in a way to some degree. At the same time, in markets, right, which are regional and local, like let's say Indian markets, because of the uptick in demand in the infrastructure sector, and after bottoming out sometime in September, October, you will see the prices kind of hold and get somewhat better. I think in China, obviously, the demand effect is probably more pronounced than the supply effect, and so you'll see quite a bit of a hammering in China in terms of the prices. Global markets in the United States, for example, which is less affected by the trade flows, probably is going to have a lesser impact on and the prices are getting up there and holding. And so I think net, discounting the effect of the coronavirus too, you're probably going to see a general holding of the prices and improvement of the prices right over the year as we move forward.
Paul, what's the average drop in capacity utilization for some of the major global miners? And given the rising inventories and challenges in supply chain and logistics, do you see steel mills, particularly in China, cutting production?
We do, yeah. I mean, at the moment, apart from Rio Tinto came out and said they might sort of trim iron ore production a little bit, but it's a very, very small amount, 6 million tons really. So we think, there will be a bit of a recovery in supply, of iron ore. But this is the time of year when there are always seasonal aspects. So they have cyclones in the part of Western Australia where they export iron ore from. Brazil also has some heavy rains as well. So that has impacted supply. And that's one of the reasons iron ore prices seem very high at the moment, just under $90 a ton, considering what's going on. It does seem very, very high, but I expect to see them sort of come off a bit. We've sort of looked at, steel consumption in China in February, and thought it could be around about maybe 30 million tons down, where we had a normal kind of February. So as I kind of sort of mentioned before, I'd be very surprised if the Chinese mills don't cut steel production. What they often do is they carry out maintenance work, which is a kind of proxy production cuts. A lot of them have plans to carry out maintenance work. The only problem is there are no workers to do the maintenance. They don't have the equipment to do the maintenance, so they've had to sort of put that off. So as a result, they're still producing more steel than they really want to at this stage. So whether that's kind of going to cause some problems down the track, we'll have to wait and see. But of course, everybody wants to know what the Chinese government are going to do in response. What kind of stimulus measures might they roll out? Because it's worth mentioning too that this is the final year of the 13th five-year plan, and there are lots of targets the government need to meet. So they need GDP to sort of pick up again. Get some of those targets by the end of this year. S&P, we've downgraded Chinese GDP from 5.7% to 5% this year. So yeah, quite a big chunk taken off in Q1.
Thanks so much for joining us. It's great chatting to both of you, and thanks for giving us an insight into how things are shaping up with regards to the industry.